presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the July 29th, terrific Tuesday edition of the Trader's Edge. Opening bell on the Trader's Edge, actually. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a marvelous, magical Monday. Let's make sure that you and I, that we do all that we can do today to have a terrific Tuesday out here. Now, for those of you that are new to the show, check-in time here at the Hotel California, we've upped it. Check-in time is now at 8 a.m. We're kicked off by John Logan. There's a great show called the Global Market Pulse. So if we're not on a radio station near you, you can always catch that show by tuning in to TFNN.mobi on your mobile device, maybe as you're driving to work or what have you. Now, we've got an interactive form. That means that you can give us a call at 877-927-6648. And, of course, you can watch the live stream of this show, of any show here that we do for 10 hours each day by going to the homepage of TFNN.com. In the upper right-hand side, you'll see a little button, 3 little smartphone-type devices on that. Go ahead and click on that. This show will stream live. This show is archived on Channel 9. My 10 o'clock show is archived on Channel 10. Of course, you can download it. You can listen to it on iTunes. Now, my outcome here during the next couple hours is to teach you how to master the tools for trading. That includes taking a look at different price projection patterns. We'll take a look at the A to B equals CD pattern. That's the lightning bolt pattern. We'll take a look at Fibonacci expansions and retracements. Of course, we can use the combination of those two tools in order to be able to identify Gartley and butterfly sell and buy patterns out there. And, of course, we always take a look at candlesticks because candlesticks are the messages that the bulls and the bears leave for us each day. Inside the cash markets, they begin their trading session here at 9:30. And they're going to leave messages. We're going to go take a look at some of the messages that they left for us yesterday. So it is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow Futures. They're traded up 39 points out at 16,955. S&P Futures up about 3. They're trading out at 1976. Russell 2000 up 4 points. Trade out at 1139. NASDAQ up 6.5. It's trading out at 3966. King Dollar up 111 ticks. It's up 11 cents, trading out at $81.23. Looks like a biggest mover inside of the currency pair market is the Great British Pound. So we'll take a look at that. Not King Dollar, but how about the king of the gold dollar out here? Gold is up $5 right now. It's trading out at $13.08. Silver's up 16 pennies, about 0.8%. It's trading out at $20.73. Light sweet crude back a little over $1 right now, trading out at 100.56. Let's take a quick peek across the globe, see what was going on inside the markets over in Asia last night. Green arrows across the board one more day. The Nikkei up 88 points, up a little about almost 0.6%. Hang Seng up 0.9%, up 211 points. The Shanghai up 0.25 of a percentage point, up 5 points over in Germany right now. The DAX up 69 points, about 0.75% out there. The FTSE up 40 points, up 0.6%. So where do we begin the day out here? Let's go begin the day where we ended the day, in essence, yesterday. One of the things that we were looking at here as we put up my Instant Windows charts. Now, don't forget, I use eSignal as my data provider. Always have. I use their charts. Those are the dark black charts that you see on the show during the next couple of hours. And I use NinjaTrader, all those platforms being fed by eSignal. If you'd like to test out the eSignal system, and I suggest that you do that, if you give them a call, you tell them that we sent you here at TFNN, that they'll go ahead and give you, instead of a 30-day trial, they'll give you a 60-day trial out there. So go ahead and give that a shot. Now, if we take a look at Instant Windows out here, if we take a look at this little rising price channel, this is the chart that we were taking a look at yesterday. Now, into the 10 to 11 o'clock show, this is a 120-minute chart. So as we take a look, it's a 2-hour chart up here. I'll go ahead and expand it. And during that time period here, from 10 till 12, we saw price really push lower. Now, maybe it was 10 to 11:30, 10 to 11-ish when price started coming back inside of the Dow. But the bears were not able to push price lower. Now, what you'll notice here, or I'll point out to you, As if you take a look at this reading right here that came in at 12 noon, that was on July 25th. If you look down towards the bottom of my screen out here, you'll see that relative strength indicator, and you'll notice that it was pushing quite a bit lower. In fact, the reading on that was about 23.65 during that 2-hour session, as it ended the session, quite frankly. Then we had take place yesterday while we were on the air, as we were going off the air. We had price move lower. In fact, inside the Dow futures, it got down to a level of 16,808. By the way, on that July 25th level, the low was 16,846. So we had price move lower. But what was it doing it on? It was doing it on less weakness out there. That, folks, that's called a divergence. That is a divergence that you want to pay attention to. Then it goes ahead and it completes a bullish reversal candle. This right here is called oh, shoot, it's not a dark cloud cover. It's called a piercing pattern out there. Thank you. I knew somebody was jumping through the camera saying, Steve-O, it was a piercing pattern. And follow through during that next session out here. Now let's take a look at retracements and get a feel for what it's done. Now, the market's neither overbought nor oversold. So there's room for the market to run to higher highs out here. Nothing to get in the way except for maybe sellers out there. They seem to try to get in the way here every day right around the 9:30, 9:40, 10 o'clock time frame. But let's just go from our most recent swing point high out here. And that's from 8 a.m. That's on July 24th. So if we go from that if we go from that high to the low that came in yesterday, what we'll see is right now, prices bounced up right into the 0.618 retracement level. Inside the Dow future, this is of the last move down, that reading is 16,966. Now, you sort of moved into it during the time period here between 8 and 10 in the morning with a widest ranging bar out there. If, in fact, we see the Dow futures get above, we'll call it 17,000 instead of, not 17,000, 16, I don't know. Look, if it gets above 16,966, not 967, but if it gets above 16,966, and the likely move is at least up to 17,000, maybe 17,000 and some change up there. If we've got some wide-ranging bars as prices moving up there, well, then that says, hey, guess what? Says that in fact, if it gets inside, here's the interesting thing with what we'll want to pay attention to inside the Dow. We'll take a look at the Dow futures, obviously, is that candle session from July 17th. That actually is a really important candle session out here. Now, closing on a 120-minute time frame into 16,993, that's the low of that session. When you come into a swing point, if you close inside it, whether it's on light volume or not, it says you'll go up and test the highs. And that's where things really start to provide us with some information. Inside the Dow futures, that's at 17,085. If by any chance we see the Dow close above that, folks, and you are short the Dow, I'll tell you that is very likely the wrong move out here. At this stage, the Dow is absolutely weak out here. No question about it. However, so weak that what? That it couldn't bust the rising price channel. That, folks, to me is not exactly a sign of weakness out there. So we'll continue to pay attention to the Dow futures out here. If we take a look at so what's good news for the bears out here? Well, if we take a look at a similar 120-minute chart out here, we'll see that the Euro-Japanese yen has begun to sell off just a bit out here. But until it breaks through the potential C point of an A to B equals CD to the upside, and that low, by the way, is 136.62, then this A to B equals CD pattern potentially still remains in place out there. So that's what's going on with your favorite currency pair, my favorite currency pair as well. In fact, speaking of currencies, let's go take a look at Great British Pound. Let's go see what it is doing. It's the one that has the most movement in it here this morning. So we take a look at the Great British Pound, and speaking of trend lines, in this case here, of course, I hadn't spoken of a trend line, but a rising price channel is most certainly a trend line. If we take a look at just simply a trend line, it's a daily chart now for the Great British Pound. And if you come all the way back to July 10th, is this a daily chart? Yeah, it's a daily chart. July 10th, 2013. You thought I was talking about July 10th, 2014. Or maybe I thought about that for a moment. So go back a year ago, July 10th, 2013, and that low out there inside the Great British Pound, 1.481. And if you just simply from a trend line standpoint, come back out here and you can touch I'd say you can tag the low from May 29th. That's at about 166.9. What we will see here is that the Great British Pound here over the past couple days has broken through that little trend line. Now, What we haven't seen is the Great British Pound try to get back inside there. Is that bearish? Well, it is enough to say that there may be a change in trend, maybe a change in trend that is underway. The reason why I say maybe is because if we go take a look at a weekly chart, let me see if I've got that up here. Yeah, I do. Let's put up the weekly chart here for the Great British Pound. Let's go see on a weekly basis if we see any reversal signals. And the answer is we do not. You know, we got just these small-bodied candles here, so no real reversal signal on a weekly basis as we speak here, with the exception that the ultimate area of resistance, which takes us back from the weekly standpoint to August 7th, 2009, as price tried to move above it with a decent-sized bar out here, well, it's moved back below. And if it moves back below, that says it can come all the way back and test this level of real old resistance. What used to be old support, now it's an old resistance level. And that's right around the area. We'll call it a price level of right around 1.645 out here. On a weekly basis, let's take a look at the trend on a weekly basis. We'll probably see that. Yeah, we'll see definitely a break of the trend on the weekly basis, probably no matter how we go ahead and even etch this out here. So the Great British Pound looks like it wants to pull back a bit further. 877-927-6648. Moving in the pre-market out here. CenturyLink lead the charge dollar-wise to the upside. Meridian Bancorp to the downside. We'll be right back.
It's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. It is always better when we're together. Dow futures up 37 points right now. S&P up about 3 points. So we took a little bit of look. We took a look at the currency market out there. Took a look at the Dow futures on a intraday time frame out there. Let's actually take let's take a look at some things that are moving here in the market, pre-market. Then we get back from when the market opens. We'll take a look at some daily, monthly charts out there. We're at July 29th, so we have a couple days of trading here before the month ends. So let's try to get a feel for what the candle signals are telling us there. But leading the charge, the upside, I mentioned here earlier, CenturyLink, CTL, is the ticker symbol. Closed at $37.71 out here. I don't see the news behind this. Nonetheless, it's trading out at $45 and change. At $45 and change, if we take a look at CenturyLink, again, ticker symbol CTL. Not a shabby-looking stock chart out here. Big, wide price spread, accelerated volume, real breakout session that took place back on May 8th, 2014, at 21 million shares to the upside. Right now, what it's going to do here this morning, it's going to gap up above its most recent daily swing point high. That's May 16th, 2014. 4.5 million shares there. The high is 38.20. Let me put this on a weekly chart out here. Let's see if that is the all-time high inside of this. In fact, well, yeah, it is. It says right here, the bottom of my screen. It says H, so that's its all-time high. So it's going to take that out. Nonetheless, let me put on a weekly chart anyways. Let's see what kind of... it's not its all-time high. It's its 52-week high. That's what that meant out here. This is kind of interesting as we pull this back now on a weekly basis. Now, the top of this downdraft that took place back in February 2013, that's at $42 and a penny. 42.01. That's traded at it's trading at 45.25, so not too shabby. We'll see if it can clear that area. If it clears that area, then it's headed to, let me pull this back just a tad more. No, it's still not headed towards its all-time high out here, but I would say it's going to try to take on that. No, it's going to do more than that. Interesting. It's quite a move up here because it is trying to take on the swing point from back in December of 2010 out here. I wish I could tell you what the news was behind this. There might be something that it's not popping through on my system. Nonetheless, that is going to pop by a good $8 or so this morning out here. If we take a look at Verizon, VZ is the ticker symbol. It's trading at $53. It closed at $51. Let me put this on a daily chart. Let's see what this is doing here at the moment. So we've got Verizon. It's trying to take out it's already taken out a swing point. Let's see if it was with volume out here. This was the trading session of June 2nd. Had 14 million shares, and it was taken out with 13 million. 17 million really as it was moving up into that. So we're going to give it the benefit of the doubt. That was on July 11th out there. So in 14 million on the trading session of July 15th. So it's got a confirmed A to B equals CD to the upside out here. The A point is the low from April 25th. The B point is out here on June the 2nd. And the C point is this little reversal session that took place on July 10th. 1-to-1. A to B equals CD to the upside gives you a price projection of 53.02. But reality is, with the move that this hat up here off of that C leg really says more likely 54.24 is the area where it is targeting. So 54.24, if that's what it's targeting. Let me see what is going on a weekly basis here for Verizon VZ. And it is going to, at that level, it's going to be taking on the swing point. 54.31 is a swing point high from April 29, 2013. Now, if it can clear that with 72 million shares out there, that sets up a even larger A to B equals C to the upside. So if it takes that out, what you're looking at here as an A to B equals CD on the longer-term basis, it's going to give a price projection of somewhere right around just 1-to-1, which is what I would expect that it would do, $58.88. That is on Verizon. VZ is the ticker symbol. Let's see, what do we have here that's moving to the downside this morning? You've got Herbalife. You've also got Meridian Bancorp. EBSB is the ticker symbol out here. Now it's the closing of a stock offering and completion of a conversion. So they're issuing more stock. Herbalife out with numbers yesterday after the close. Now closed at $67. It is trading right now at $59. And at $59, that's going to, it's still not trading below the trading session from July 22nd. That's 52.50. It gets below there, then things start to get a little bit dicey. So it'll be interesting to watch how Herbalife trades and the battle between the titans of the billionaires, Bill Ackman and Carl Icahn. So we'll just sit back and watch it. We'll watch how that theater unfolds out here. Dow futures up 46, S&P up 3.5. We'll be right back, folks.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow up 23 points. Trade out at 17,005. S&P's up 2.5. Trade at 1981. Russell 2000 up a couple of points. NASDAQ Composite up 10. New York Stock Exchange up 12 points out there. Gold still up 390. Silver up 15 cents. Trade out at $20.17. Some information provided by one of our folks in the Tiger's Den out here. The Russian Central Bank officially increased its gold holdings by 16.8 tons to, and that was in the month of June out there. And if we go take a look at gold, let's take a look at gold. Let's do a couple of things out here. First, let's take a look at gold. I don't have the chart updated. I'll update. I'll try to update it today or tomorrow. But let me come over here and I want to take a look at gold and silver. What's interesting, I really want to update the silver weekly chart out here. I haven't had a chance to do that. But as we take a look at what I can tell you, if you're watching us on Tiger TV. For this on the radio, let me explain to you what we're looking at. But if you're watching us on Tiger TV, this is the weekly chart for silver. And what we can see here on the weekly chart, the red diagonal line, clearly a breakout of the downtrend. That took place the weekend of June 20th. 2014. But what's more interesting here really about silver is, and it applies to gold, but more so on silver, what's interesting, because it's been stronger than gold out here. In fact, even today it's a little bit stronger than gold on the little bounce that we've seen here. But not the very bottom panel. That's the 14-period relative strength indicator. But it's the center panel here, which is the commitment to traders data. The commitment to traders data, CFTC, you can get this information yourself. You can put it in a spreadsheet if you want. And the commitment to traders data, they release the numbers every Friday at 3:30 in the afternoon. And there's a lot of different ways to analyze it. I always take a look at different stories on Bloomberg, and I analyze it totally different than the way that most others do out there. And oftentimes my information, the way I look at it, is totally different than the way somebody might have reviewed it. But most of those folks are news people. I don't know where they get their information from. I know that I do all my own work out there, so then I really know what it actually means, if anything at all, out here. What I can tell you is that with silver rising, that the large commercials out here, now that's going to include certainly the mines that are selling forward their futures out here. But nonetheless, what I can tell you is, and if you thought that the trend had changed, right? They got technical analysts out here. You take a look at a weekly chart. Let me just ask you this question. With silver, coming off of a nice hammer low out here, you've got good support down at $18.18, and you know that you've broken a trend. Put yourself in place as the CEO of a silver mine out there, and you know that you've broken a long-term trend. How apt are you to actually go ahead and sell into this market? Maybe you think that really more so there's kind of a bottom that is in place out here. I'm not saying there's not a financial reason to maybe sell some of your production forward out here. But if I were the CEO, I would have to sit here and say, the trend has changed. Now, I'd also want to know what's going on with the big money guys, the big boats out there in the marketplace. And that's really what the COT data is referring to here. And yet the big money has ramped up their net short positions much higher than the level than it's on my screen out here. I can tell you that by just reviewing the data, but much higher than the highs out here in February 28th. We're not even back to the February 28th high, which, by the way, is at $22.18 out there. It's much higher than, they're back to levels that we haven't seen in a year. That is for sure. And really, it's the same message in gold. Now, you can see on a weekly basis, silver really hasn't done much. It just hasn't done much here out there. And so I just kind of threw out the opposite. I don't know what Fletcher just posted some information inside the Tiger's Den out there. And I appreciate that very much, because what it does is spur a little bit of conversation out here. And it was just information. It wasn't to say one way or the other what it actually meant. I want to say that the mere fact that Russia is buying, and we know that clearly here it seems like what the world is trying to do, the world being Europe, the United States, is maybe inflict a little bit of financial pain, because that's really the only thing that has been done so far out here. Maybe it's those central banks that are selling into Russia, because they also have been increasing their net short positions. Now, it's a long-term trader out here that can afford to take some heat, and they take a while to build their positions out here. And this is where it's interesting, because we're in a 13.5-month cycle. And sometimes it doesn't happen just exactly to the week out here. And so I'd say we're potentially a few weeks away from, maybe we've already made the bottom. Maybe, in fact, it was last week out here. Maybe this whole cycle pattern is off out there. I would feel more comfortable that cycle pattern was already in place if we weren't seeing the large commercials really ramp up their net short positions out there. So I just say you got to be careful, because the big money that is out there is saying something different than the way that most of us might be viewing the charts out there. So I just pass along that information. I'm neutral at this stage when it comes to gold. I'm actually waiting to see if there is that scary push down, because if there is that scary push down, what I'd like to be is the guy on the other end that is actually buying gold at that stage out there. Anyways, let's go take a look here. We've got the Dow's up 20 points. The S&P is up 1. So that level inside the futures, that 0.618 retracement level, that acts as a resistance zone right now, as we know that price has moved back there. I'll throw that chart on the screen here one more time. Then we'll move on and take a look at the we'll go ahead and we'll take a look at the weekly and monthly charts, just to get a feel for what the larger picture is. So here's the Dow futures. You can see at this stage is selling off just a bit out here. So 16,966. That's that 0.618 retracement level. That's a area. That's what we want to really be able to gauge out here inside of the markets. Now let's go take a look at the indexes. Let's go see what they're doing here on a daily basis. Let's start off. We've got the S&P 500. So you got the S&P 500. As we take a look at one of Stevie's charts out here, we'll take a look at some of the Rhodes Momentum Indicator signals out here. What's interesting about the S&P 500, I think, that we can watch, you take a look at candle signals that the bulls and bears make for us each and every day. There's the most important candle signal, I think, out here is from the trading session of July 21st. Now, July 21st was a hammer candle. That says that low is an important low. Inside the S&P 500, that is 1965.77. We do have a price relative strength divergence pattern. Usually that is a signal that price wants to move lower out here. However, and he did have that little gap down, that little falling window out here that took place the weekend of July 25th. But last week's candle session is what's referred to as a high wave candle. High wave candle looks like a doji, smells like a doji, but it's not exactly a doji. What it means is that price has lost its way. You don't expect price to lose its way so early in the change so early in what could be the beginning of a downtrend. Look, this chart here says that price ought to pull back. However, I think that really price needs to close below that low of that hammer candle on the daily basis. That's all that it needs on the daily basis, 1965.77, in order for the bears to really have any chance to push price lower. Where could they push price lower to? Well, that blue thick line on my chart out there, that happens to be the 50-day exponential moving average. That's at 1950.20. Right now, they haven't been able to bust through the 20 level out there. So the bears are just, they're not able to do much with the market that, quite frankly, they've had control of since July 7th, I believe it is, 7th or 8th, when we take a look at the New York Stock Exchange. Now, that's the daily chart. Let's take a look at a monthly chart out here, and we'll do this certainly in a couple of trading sessions. But if you take a look at the monthly chart for the S&P 500 as we speak right now, that's where we're at. And obviously, a lot can happen in 2 trading sessions, as we know. But let's just take a look at the information that we've got right now. I ask you, is there anything bearish about this chart, about this candle configuration that you can see? You got to realize we are also in the so-called unfavorable seasonal cycle, the sell in May cycle, which doesn't mean that sell in May necessarily begins on May 1st out there. In fact, I will tell you just otherwise. Now, sometimes it does. I won't even go with oftentimes it does. If you take a look at history, the market doesn't make its high necessarily on May 1st out there. But that's really not the issue. We need to know that we're in an unfavorable seasonal cycle out here. And what's unfavorable about what we're looking at on a monthly basis for the S&P 500? Yeah, exactly. Exactly nothing as we speak right now. In order for the S&P 500 to change that tune for us, and it could happen, but what it would need to do is you'd need to see the S&P 500 by today's Tuesday, so by the end of Thursday, so Friday morning, you'd want to wake up, and you'd want to see a close below 1923.87. 1923.87. So that's about what? That's about 66 points or so from where we're at right now. So it most certainly could happen. That would be one heck of a ride on the way down in just a couple of days out there. But that's what it would take in order, from a monthly standpoint, to turn the chart that we're looking at into any kind of potential bearish look. Now, remember, the trend is your friend, and the larger trend is more your friend out there. If we take a look at a weekly chart here, now we're only a couple days in, so this week here it doesn't really matter a whole lot. You'll take a look at that high wave candle. So I mentioned on the daily chart, there was a high wave candle from a couple of trading sessions ago. For the entire week, what the S&P 500 did last week was created that little high wave candle. It's not used as a area of resistance. It's not used. Doji is a different story out there. High wave candle just simply says that it's lost its way out here, but the monthly chart says, hey, I haven't lost my way whatsoever. So that's what's going on inside the S&P 500. Let's take a look at the Dow, because the Dow, well, actually, I want to take a look at this chart here. We're going to take a look at the let's take a look at an area where there has been some damage as of late. That's going to be the semiconductor index, and we got to pay attention to the semiconductor index. But let me come over here and take a look at the daily chart first, because on the daily chart, we've got one of Stevie's price relative strength divergent pattern tops that are out here. They've been confirmed with reversal signals, reversal candles, no question about it. And, in fact, we've seen a break of that, not just the 20-day exponential moving average, but inside the semiconductors, they've seen a break here of the 50-day exponential moving average as well. But the interesting thing here, as the market, the interesting thing about a day like yesterday, and I didn't get a chance to run the scan of the entire markets out here, meaning the entire S&P, NDX, the Dow, and some other ETFs. I'll do that here after the show or sometime this afternoon. But what actually formed on a daily basis yesterday was a hammer candle. It may be hard for you to see out here. Let me do this. Let me turn off. No, I'm just going to, you know what? You just have to trust me. You don't have to trust me. Go look on your own chart. But that's a hammer candle that was formed out here. I was going to turn off the colorized Rhodes momentum indicator signals out here. But I don't want to turn those off because it just gives you a better visual when you go take a look at the longer-term charts as well. What I can tell you is one of the weakest areas here yesterday, and the hammer candle is very cool. If the market's going to croak, certainly the semiconductors and the financials are going to participate, in fact, help lead things on the way down out here, in my opinion. And that's what we've actually seen here. The semiconductors have cracked. They've given us the reversal signals out here. But yesterday they formed a hammer candle. And that is important. Now, it's important from 2 reasons. One, you see it close below yesterday's low, that's 608.42. That's bearish, and very likely sets up a run down to at least the 200-day exponential moving average. Forget about taking a look at retracements. We'll just assume that that is a likely target area, which is right around 571.72 as we speak right now. But nonetheless, you got a hammer candle yesterday. Today looks like it could end up with being a bull sash, a bullish engulfing style candle out here. But you got a reversal. You absolutely got a reversal inside the stocks. Now, that's on the daily chart out here. Let's go take a look at a weekly chart, see what's going on inside the semiconductors out here. Now, in a weekly chart, you really don't have much. You haven't got caution. That yellow area, as you take a look at my chart here, is cautionary. But as it was actually moving higher on the weekly chart, it didn't have a price relative strength divergent pattern out here. None at all. So actually, it still looks relatively bullish, cautiously bullish out here inside the semiconductors. But the weekly basis, it has not fallen apart. Now let's switch over, take a look at the monthly here real quickly here. And on the monthly basis, all it's done, it just said that there's some dark clouds overhead, that little dark cloud cover candle. And on a scale of 1 to 5, with 5 being the strongest, it's a 2 with regard to its bearishness from a reversal signal standpoint. The real importance is the follow-through. That would be next month out here. So even the semiconductors here on a longer-term basis, the trend really hasn't been damaged that much whatsoever. Now, let's go take a look at the Dow. We'll do this in reverse order. We'll start with the monthly so we get a better feel for the larger picture here. So here's the Dow Jones. If you take a look at the monthly chart out here, tell me what's bearish about the pattern that we're looking at on a monthly basis. Yes, exactly. You got it right. You had it right. Absolutely nothing. Okay, it's moving higher on less relative strength, and that has been associated with a top in 2007, a top in 2000, a top back in 1929 before the crash out there. So I'll give you that. There's no question. But it doesn't have the other elements that go with it as we speak at this stage. There's no reversal signal. That just is a kind of like a warning. It's like a check engine light. It's the kind of check engine light you pay attention to, but it's not the one where you need to pull into the gas station and actually take any kind of action. That's the monthly chart now for the Dow. Let's take a look at the weekly chart here for the Dow before we go into a breakout here. You know, okay, it still has a price relative strength divergent pattern, but the weekly chart, that looks pretty darn bullish to me. I hope it looks bullish to you as well. And now let's take a look at the daily time frame out here. The daily time frame beginning to show some pain. And what we do know is that high that was made out here on July 17th, we look at the futures contract when we open up the show out here inside the Dow. That number, the Dow Cash Index, is 17,151.56. Any close above that, and the bears are toast. 877-927-6648. It's not there just yet in the Dow, but it would be French toast. We'll be right back, folks.
It's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. We've got the Dow up 37, S&P up 3, NASDAQ up 20 points out here. Russell 2000 up about 0.5%, up 5 points as we speak right now. Leading the charge, the upside dollar-wise, you've got Priceline up $13. That's up 1%. Pharma Cyclics, though, having a second nice, strong day, up about 10% right now, up $10 and change. Let's go check in on Pharma Cyclics. Ticker symbol out here is a PCYC. I recall taking a look at this with you last week. We were noticing that Pharmacyclics was trying to take out a little bit of a little resistance area, small little consolidation pattern that was the high out here from May 14th that it was trying to take out. Well, it's done that successfully. 104.38 was the number. 1.9 million shares. Price moved in there with 2 million shares and closed above it on July 23rd out there. Had a nice day yesterday. Volume, though, was 1.4 million shares, so not too shabby. But today, volume really to the upside here. And this does have a high volume high on its daily chart out here. And the volume to the downside really wasn't too bad out here. So nothing really damaged as I take a look at the daily chart here for Pharmacyclics. The high volume high that it has on the daily chart, that takes you back to February 21st. 3.3 million shares traded hands that session. The high is 154.89. The low is 148 out there. It does look like Pharmacyclics is headed back to that area. If we take a look at retracements, though, from that high down to the low that was established out here on the trading session of May 27th, you'll see you've cruised above the 0.382 level without any problem. The next stop for folks to get off of the elevator inside of Pharmacyclics is probably the 127.24 level, your 0.618 retracement area. But if it can move into that, quite frankly, today, tomorrow, more likely offers a quick move up to the 0.786 area. And if it's doing that and volume is accelerating, well, she'll go try to take out the, she'll go try to at least test that high volume high out there. If I take a look at a weekly time frame for Pharmacyclics, let's go take a look at this out here and see if there's anything here that looks bad. Now, the weekly basis is not a high volume high out there. It doesn't mean that it doesn't get tested. Just ideally, you'd like to see both out there. But nothing real bearish of major significance that I can see inside of Pharmacyclics. PCYC is the ticker symbol. We've got United Therapeutics, UTHR. That they're out with numbers. Their net income, $111 million versus $79 million from the prior year. So that's looking pretty good. Revenues, that was for the second quarter. How about this? Check this out, folks. They generated revenues of $322 million and their net income was $111 million. How do you like that? 30% net income number out there. That's pretty darn strong. You'd like to own that company. UTHR is the ticker symbol. Let's go see what the stock chart is doing out here. But boy, how about that for profits? Well, it's got a high volume high. So United Therapeutics, that's a weekly. It's got a high volume weekly high out there on the weekly chart. That says the 116.65, 103.08 level should be tested out there. That was a nice sign of strength. Let me see what the daily chart here shows us real quickly before we have to end the show out here. United Therapeutics, the high volume high, I've got to go. Oh, yeah, absolutely. That high volume high on a daily basis was tested, but I say it heads back up into that range here, and that's at about the 115, 116 level. Well, folks, it is Terrific Tuesday. Thanks so much for joining us. Remember, Hotel California, we get things kicked off here at 8 o'clock each day. If you have to start your Tuesday, have a great trading day, a great day, great working day, and I look forward to seeing you bright and early tomorrow morning. Take care, folks.
Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.